Right, we are on Tuesday the 8th of June. It's my birthday today, so I definitely wasn't trading today. But I was having a quick glance over the charts at the odd time, and I did have an area of interest marked out within this little box here. So there was potential break and retest entries to be taken, and then riding them up to the key levels, which they failed to close above the 1902 area, and then ultimately went back down. But there was a very nice play to be had. As you can see, this 4-hour new support area was respected, and we did get that push up to the previous high. Obviously it failed to close above it and continue up to 1912 levels, but there was still a trade to be out to the highs, and then obviously taking your profits once you're seeing rejections around there. So I'm going to go into the 1 minute and just break down the best way to take this trade. One thing I wanted to add as well is on my last video, I only sort of showed the 1 minute time frame throughout the video, but when I am watching the charts, I do use the higher time frames, and I only use the 1 minute when prices reached areas of interest. So i.e. if I would have seen throughout Asian price retracing down, I would have marked my area here, and then once price, I wouldn't look at the 1 minute when price is, for example, here and it's not reached my area of interest. I'd only start watching the 1 minute time frame once we'd reached the area which I'm willing to take a trade. So that's something I didn't really touch on the last webinar, and you can just kind of get lost in the noise if you just focus on the 1 minute time frame and the constant movements of price. You can get lost and you can end up taking trades. You can end up finding trades, your mind playing tricks on you, and you finding trades which really aren't there. You rushing entries, or you just frying your head watching the 1 minute constantly. So this is the best way to do it. Like I said, I've mapped out if price comes back down to this previous 4-hour support, there could be a break and retest opportunity, which there was. Well, I'm going to watch on the 1 minute time frame and see the best points of entry. And another thing to add as well, actually, just quickly, is that when I'm trading GJ, I only want to be taking entries at and around the key levels, because the key levels are psychological price points, which are the flat levels 0, 100, and then there's the 200 level, the 500 level, the 800 level, and then the flat level again. So there's only either 30 and 20 pips between those levels. So obviously you want to be catching the entries around the key level points, the psychological key level points, because there's not many pips in between each level. So if I was on GJ and I took a trade halfway between the key levels, then there's not many pips on the table, and it wouldn't be worthwhile, it wouldn't be a valid trade to take. Do you know what I'm saying? So, but there's a difference with gold, because some of the key levels have quite a distance in between them, and you can take trades in between these levels because of the price ranges are big enough for a scalper to take an entry in between it and it to be worth it. So again, I'm just going to go back to the 1 minute here, and then we'll just break down price action and just see where it was. See how this move ended up, this corrective phase ended up turning into a retest, basically. So just before, we do have this double bottom here. So obviously previous price action we've had, I like to use these lines, it just simplifies things. We're getting this corrective market structure, but once we get to this point here, double bottom, literally pretty much a double bottom in it. You get a double bottom there, and then you get a break of the recent higher low, get a break of that, and you get your retest of it. So at this point, you're starting to form bullish market structure. You've also had a break below the level of interest which you're looking to enter on, a failure to close below it a failure to push below it significantly twice. You've had a double bottom form on the 1 minute time frame, and now you're at here, new 30 minute. See that new? You're at a new 30 minute. You got the new 30 minute coming up. You're not getting much of a bottom wick. It's not ideal, but then you get your hourly close at the key level. So that's just not a key level. This is not a key level. You get an hourly close above the area of interest. So technically, price is respecting at the moment. It is respecting your area of interest. It's closing above it. So if you look on the hourly, let's get rid of this purple line. So you look on the hourly here as well. This for me is quite an enticing candle. This is nice because you've had the bearish push down. Bearing in mind we're very bullish on gold, obviously, and we're getting this push down, and then we're respecting the 4-hour level perfectly. We're getting this exhaustion candle, getting a nice wick rejection to the downside, and a tiny bearish exhaustion candle. Sorry. So for me, you should be at this opportunity saying, right, okay, well, max, if we break this high here, then let's just see the reactions to the hourly high. Let's see what reactions we get on the 1 minute there. And for me, this is a sign of, you know what, the bearish corrective phase could be exhausted there, and we could be getting a retest to test the highs of Asian. So of the Asian session. So back on 1 minute here. Got that hourly close now. You're getting that hourly wick bottom down, hourly wick down now, bottom wick down here, and that's the high. That's the high of the hourly. So let's see. If we get closures above here, we should technically get a solid push to the upside. Or you could even catch, if we form support here now, you could catch a more aggressive trade, a more aggressive 1 minute entry here. And then if we get closures above this sensitive price area and the hourly, a break of the hourly upper wick, then we should get the continued up to the upside. Continue push. Let's have a look. Big bullet bears exhausting. Right, okay, so let's say you take an aggressive trade here. See, say for entries above here. If we do get a bearish engulfing candle engulfing these two bullish candles here, dip out, take a small loss of 4 pips. Take a small loss. I wouldn't let price push down and test the bottom of this order block and smaller support. I'd just dip out and wait for a better entry, and just bear in mind that I've only took a tiny loss at this point, and I'd be emotionally neutral enough and not pissed off enough to take another trade, thinking like logically. So he's not engulfing anything. Nice pushes. See how we were talking last time about waiting for candles to close? If you panicked and closed halfway as the candle were pushing down, then you could potentially stopping yourself out of break even when you don't necessarily need to yet, because there hasn't been any confirms. So you close the trade. like I said, safer entries out of here. This is not really the best price action. You're not getting that bullish push at the minute. You'd maybe just it's not the best. So when you're getting your move, you just want successive bullish candles like this. You don't want weak volume. That's better. Nothing's really closed above though yet. Yeah, quite indecisive at this point. Probably close out there, and then wait for a close above this high. Let's just close that one out there. There we go. First TP here, and then watching for these sensitive price areas above these, just above the key level, waiting for potential forms of exhaustion around these levels. That's if we do get to this level off this push here. Again, if I do get an engulfing candle, an engulfing bearish candle, which sits below this high it's just broken from, that's for me an indication that we're not ready. We're not ready for the the bullish push to the upside, and just wait for better entries again. Just looking at the time of these candles. Okay. So we have got the hourly previous high here. Let's see what it goes. No, that's not good. So there you go, you close on that candle. 3 pip loss. So really now we're looking for time here. 10 o'clock, new 4 hour open. Yeah, it's not the best time to enter, is it? New candle, 4 hour open, not really far of this. Yeah, fucked up there. 10 o'clock open. Not really got a 4 hour bottom wick at the minute, and it's not a really good time to be entering, is it? Me and Sword usually got fucking gym at this point. Let's have a look. Just gonna fast forward things a little bit. There we go, we're starting to get that bottom wick now. Now let's see. I can imagine, obviously we know the move what happened, so, but if it was to reverse, I imagine it'd either be a fake out of these lows here or a respecting of these lows here. That's not even got there. Bear in mind now the 10 AM candle has formed its bottom wick, the 4 hour candle. We've had a nice 15-minute close. Let's just have a look at the 15-minute. No. So we're getting that double bottom rejection. Yeah, it's fucking flying now. bastard. See how they disrespected there. Tell me, 750. There we go. Finally gets there. Dog shit over there. It's quite slow. Nasty. Oh. 12.42. Oh, that's nice. Not a lot of bits. You get a break and retest at this 1897 level. And then let's just watch the price action above here now. Monitor it. See how this is looking. This is looking good. You've got 1 minute closures above these sensitive price areas. So I don't like how this candle body's failing to close above the previous bodies. But we have retested the sensitive price area and now we've closed above it. Talks about New York Open, hourly bottom wick. Quite messy price action today, but we do get there. And there we go. Finally get there. So again, it's can get quite lost in the noise. Trying to figure out the best way to play this trade. Let's just break down the market structure. Corrective phase. That break and retest the key level was quite nice. So again, as I originally said, safe buys was above these previous highs here. First entry, first time we had the closure above, and then it being 10 o'clock and the 4 hour bottom wick not forming yet. We had the rejection and closure below it, where you either you wouldn't take it because it being 10 PM, or you would just get out as you get this closure below there, so a minor loss. And then we get the 4 hour bottom wick, and you get the 4 hour bottom wick. You get the 4 hour bottom wick eventually being formed, and then you get the break above again, and then some bullish market structure forming around here. bullish market structure, and then again your safe buys would have been when you have a strong convincing. Oh fuck, what's done? Is when you have a strong convincing close above here, close above sensitive price area. With stops below. Stops below the recent highs. You could take partials at the first TP profit, at first TP, first key level, or set break even, and then look to ride the buys to the next key level. And then we'll look in a minute how to obviously this level ends up being rejected. So we'll look at the best way. We'll just try and figure out why it rejected and the best way of scaling out your buys and just closing the rest of the position. Sorry. So the more safest point was that when you get the strong bullish candle closures above here, we did get the minor pullback of the pullback, but this bearish candle doesn't engulf this bullish one, and then we get small tiny exhaustion candles here, and then the strong pushes up, strong bullish candles, smaller bearish candles, stronger bullish candles. So as you can see you can see some green there. You can see the difference between the bullish and the bearish candles. As long as you are respecting the recent high it's just broke out of, the trade idea is still valid. It doesn't move ideally as well as you'd want. You much rather just push up nicely like this and then have minor pullbacks and just continues pushes up. But it is quite slow. It's 11 o'clock. The price, the volumes, volumes are not notoriously high at these times. More towards pre-New York. It's a dead zone in it really. The better times to trade are at pre-New York, New York, after you've had the London open pushes between 8 and 9 really. So again, not the best market structure, but you can see bullish market structure being formed and high breaks of highs, breaks of higher lows and new highs being formed, and higher lows being respected. Eventually it does get there, and then to scale the buys and continue them, you take your first TP there or set it at break even. You get in the nice strong candle body closes above, and then here you've had a 15-minute, 12:45 candle. You've had a 15-minute close above this key level. That's fine. You're going to anticipate a bottom wick coming down. You do get the bottom wick. You do retest 1897, and this would be a potential re-entry level. But I don't like how small that bullish candle is before the put. 1 second. Just bring you back in 5 minutes. Just doing this webinar. Bye. I don't like how it's quite very small in it really, so it would be quite an aggressive entry. You hope to be in buys below it anyway, bearing in mind that I've had this area of interest marked out from before. So yeah, this is the idea, that you can continue scaling your buys up, getting that 15-minute wick down as expected. You've had a rejection of it, closes above, happy days. Then that bearish candle is just obviously very small compared to this one, and all it's doing is just retesting the high it's just broken, and it keeps going, pushing. Market structure consolidates here a little, but again, price moves in consolidation and impulse moves to the upside and downside, doesn't it? So in all time frames, so you've got to expect these kind of things sometimes. You don't always get the straight bullish moves or bearish moves to your TP. And bear in mind, this is a 1 minute chart as well. So again, pushing up, your runner's still valid, you're not breaking any laws, you're just respecting these laws, consolidating before you, and obviously when you're consolidating and you're betting with the trend, you're more likely to break to the upside or break to the downside because you're bullish, obviously. And then eventually we do get that push to 1902. Let's just see how. Right, okay. First sign, strong push to the upside, rejection, closure. Although it is a weak bearish candle, you do have a strong wick to the upside, which was rejected. Second sign, you've had a strong bearish candle engulfing this little push above 1902. Also, this is the main reason. So you've got a new 30-minute open here, 130 candle, and if I was sat here at 130 at the 130 candle, I'd maybe just take my position there. I'd either take my position there because you know there's a good fact that you could get the bottom wick down. You could get a bottom wick down which would retest, which could either go and retest 1897, or it could, whatever it is, you get a bottom wick down which would potentially beat your profits. On this scenario, you get 30-minute open and you just get a strong push to the upside with no bottom wick, which is fine, happy days. If you hold the trade, then you scale it up to your next key level. But obviously you're being cautious that the 30-minute hasn't formed a bottom wick and we've got above 1902. It's all well and good. We've instantly rejected it and started closing below it. So for me, I'd like to think that I'd be getting out at this point, bearing in mind I know that there's not a 30-minute bottom wick, and there could well be one formed, which could end up me closing my runners around 1897. It's better to take your piece of the pie. So if you was to keep hold of it, then technically you could around this level. Let's see what happens. I imagine this is the part where it does end up correcting itself. Yeah. And there it goes. There's your 30-minute. That's your 30-minute candle with more bottom wick, and here's your bottom wick being formed. And look at that, melts back down, big rejection, and then we're just getting a complete change in momentum. Look at these consecutive bearish candles. You've had this choppy wave up, bullish, and then you just get profit taking. So I imagine this to me sort of seems like just the buyers and sellers switching. Buyers exiting the positions. They're seeing the new 30-minute, no bottom wick as well. They're getting to previous levels. Also, this is interesting. You've just grabbed the liquidity high from Asian, job complete, took out the sellers from Asian, took their stop losses, job well done. We've got a 30-minute with no bottom wick. The buyers, you had a rejection to below, and then you closures below the key level. Buyers exiting the market, sellers entering, and we get the complete bearish momentum, big crash to the downside. And if you're not taking any profits there, then you had a stinker, mate. You've been stopped out break even, or you've lost your trade. But I definitely wouldn't do that. So I'd like to think I would have either closed on the 30-minute open with us consolidating here, or waited to see where it pushes and see if it respects these lows there for my trade idea to still be, see if we would have got that week, if we would have got that 30-minute bottom wick first and it would have respected these lows there, then I could hold the trade, hold the runner or the trade or whatever I set it break even, and then run it up to the next key level. And then once you get the closures below, and these, especially this one, that's where, especially because you're closing your runners. Because like I said, you've not got your weekly, you've not got your 30-minute bottom wick there, and you've got your rejection, you've got the liquidity grab from the Asian highs. This is the confluence. You've got the liquidity grab from the Asian highs, job complete. They grabbed the liquidity from there. We've had a 30-minute with no bottom wick. We've had a failure to hold above the 1902 level. Closures below here. Check the rest of the trade. Thank you very much. It's not looking good to me now. Especially, you should at least have your runner to the first TP point. You're getting these consecutive bullish candles and closures below these minor supports. You should definitely be looking to get out as well. So that's the trade on gold today. Best way to tuck it on the 1 minute. But yeah, double bottom respect, double bottoms really respected. That's one thing I haven't noticed. So right, okay, that's interesting. And this is why you shouldn't be more zoomed in onto the 1 minute time frame. At all times, you've got to be obviously, like I said, the areas of interest you've got to. I've got to personally keep an eye on the 1 minute, try and find his entries, but I've got to bear in mind that price will react to these higher candle support and resistance areas, and look at where the rejection is. It's pretty much at the 15-minute candle body support level where the double bottom is formed. So if I was more aware of that being a 15-minute candle body support, and we were getting these rejections here, that's the 15-minute candle body support. If I was getting these rejections at the 15-minute candle body support, engulfing candle, another engulfing candle, and closures above these areas, maybe I'd be more inclined to take a higher risk entry at that point, and just closing out if we get any engulfing candles below it, and then maybe that'd be a higher risk entry, or it'd just be a sign to that, alright, okay, we've just rejected the 15-minute, we've formed our 4-hour bottom wick, we've rejected the recent 15-minute support. This could be a potential double bottom theme being formed on the 15-minute, and safe buys again would be above these previous higher lows, lower highs, higher lows now. And then it does go, doesn't it? So yeah. Right, I'm gonna look at GJ quickly, see if there are any potential moves to there. Double bottom city. Nah. Dog shit for me, that, to be honest. Not looking trading that really. See if there's any potential trades at 154,800. That's literally all I can. Nah, GJ's just looking shit. Not good, mate. Just looking at gold rate at the minute. I want for GJ. I want safe buys. Breaks of 156. Fundamental catalyst behind it. Safe sells. 153, 500. Break of the higher low. And breaker of the order block before the bullish push. So 156, that's where I'd be looking for safe sells, looking to correct some of this price action and push up. For now, within the range, it's not looking pretty, is it? Yeah, it's just not looking good. Maybe trades above 155, 200, but also you've got to look out for these rejections at higher time frames, 15 minutes. So if it's in the confirms that London trading always win, I won't be trading anyway probably, but if it's in a retest of 155, 200 and then closures above this sensitive price area, and then get buys up to 155, 500. But like I said, when you're trading the range, you just want to be in and out, especially with GJ, you just want to be in and out of the market and taking your little piece, because you're in a consolidation and there's plenty of sensitive price areas like here, where price could react and you could just end up losing your trade or just not taking any profits. So yeah, not looking too good to trade at the minute. And then yeah, look at gold though. You know what I mean? Gold's on its arse today as well. Really, like, there was a trade to be took here, but it was difficult, wasn't it? On the 1 minute. I don't even know if I probably wouldn't be able to catch that, to be honest. It's just too much noise for me at the minute. It's just too much noise for me at the minute. I wouldn't have probably got that on the 1 minute. I'm not experienced enough. But yeah, that's my breakdown for today.